Welcome to TheoTrade. It's Don Kaufman. Here we are. It's November 7th, 2016. We are on the eve of the election. Right now, with the S&P futures up a whopping, 41 handles. We still have about 15 minutes left in the trading session, all the way up to 21.21. Again, exceeding one of the recent levels we put in place of 21.12 over here, just exploding to the upside. Now, time out for a second, okay? You get this tremendous amount of information over the weekend here. The S&Ps explode to the upside. Everybody's looking right now. They're like, that's it. The election is over. What are the markets really dictating about risk? Well, immediately everybody cruises over to the VIX, and the VIX backs off big. It's down 15% today. They look at the volatility futures. They're down 10%. Well, that's a little bit of a cautious stance. You would expect volatility down a bit more today. Okay, the bonds, not much action inside of the bonds on all of this news over here. However, I'm going to show you a very different take. And this is not so much, again, on the eve of the election here, I don't necessarily want to get into what's bullish and what's bearish. The things that you're going to have to decide, okay, is really how much risk are you going to be willing to sustain in the next few trading sessions, okay? Really, the decision over here, first of all, we have to step back from the market for a second and say, okay, so we had, this 9 down days in a row. Underlyings like Google, Apple, Amazon, Facebook, okay, hit extremely hard. And I'm showing you here the SPX all in the midst of what? One announcement over here, we'll call it the FBI rally. I like that. The FBI rally, we explode back to the upside. The question is this really the FBI rally, or was this just more of a quintessential, okay, rally back after a bit of a bear move? And that's something that everybody's going to have to question for themselves over here in the next couple of days, because I'm telling you right now, out here, out in Never Never Land, we have absolutely no clue as to directional risk. Here, though, I'm going to show you some areas that I think you need to have some concern for inside of the next, 72 hours, and more appropriately, really coming into Tuesday, Wednesday, Thursday of this week, how much risk is really out there. First of all, allow me to show you with about, again, 13 minutes left in the trading day, one thing really catches my attention, and that is the VVIX. It's the volatility of the volatility index. So the volatility itself backs off big today, but that's the volatility that everybody's looking for. That's the volatility that's, plain as day. Everybody looks at the VIX and they go, the VIX is getting crushed. It's all over but the crying. Yeah, and then you go look at the VVIX. And the VVIX comes off big. Yeah, but here we are in the last 2 hours. This thing is bid like crazy. Anytime we get a VVIX north of 110, you have to take all of your directional bias off the table, okay? Chaos rules the day when the volatility, the volatility of the volatility index is above the 110 level. It is most decisively above the 110 level, and it's going to close that way today. And moreover, you just have to recognize that this means complete and utter uncertainty. It's a flip of a coin, okay? What it does entail, though, is big, fast reversals. Intraday trade can be extremely chaotic. Now, I can't tell you if the VVIX definitively over 110 means whether you're bullish or bearish. Again, it simply means, as I said, chaos kind of rules the day. You get fast, uncertain moves. That's one area that I don't think enough traders are going to be recognizing in this rally. The next area that you really need to key in on, and this one's big, we go to the SPX. Okay. And the SPX, when I say it drives order flow for the entire marketplace, it does just that. If you were to look over at the S&P 100, we can do that. We just cruise over to the S&P 100. Look, everything in the S&P 100 is up today. Why? Because there's complete and utter correlation. All right, so all the stocks are up with the S&P 100. But one of the areas I think that's a little bit disconcerting that, again, traders are going to miss. Did you look at the expected move? Okay. Again, this is over the next 2 trading sessions. So this includes Tuesday and Wednesday. That's why I said, the next 48, 72 hours out, things are going to be real wild. All right. Why is this important? Because everybody saw the VIX come off big. They're like, oh, yeah. But come on, there's no risk out there. The election's over. Is it? If it was over, why did the short-term volatility, which is, again, the November 9th expiration in the SPX, it still has a $48 expected move. Now, time out for a second. Just the other day, we looked at this, and here it is. So I'm going to back up. I'm going to close up this left side bar so we get just a clear view of this. Just the other day, and this was, okay, on the close of Friday. Yes, this is actually yesterday's date. Okay. Yesterday, of course, was Sunday, but it was from the close of Friday. We were looking at a $60 expected move. Okay. So it's a $60 expected move, and that's pretty intense. That's a big expected move. When you're on a Sunday and you're waiting between now and Wednesday, there's going to be a $60 move. Now today, okay, you realize we're already up 45 points, but there's still a $47 expected move. Only $13 came out of the expected move. And here's the irony of the whole thing. The volatility actually went up. So every other trader that's looking at volatility, like, oh, no, don't worry. The volatility, it's all gone. It's all gone because the VIX got crushed. Yes, but the VIX is incapable of seeing short-term volatility. The VIX is nothing more than an equation, and it includes options that are more than 9 days out. If it included short-term stuff, well, you would see again that volatility, ironically, has gone up very, very slightly in here. In fact, if you look at the, I'll go back to the Analyze tab and I'll show you. It's a 29.69 with a $60 expected move. Today, we're 33 vol with a $48 expected move. So what happens? Market moves 45 points, but the volatility, it remains. And what you need to really think about, and this is just the key point, okay? Again, forget what you think, be objective in the next 2 days of trade. This is no longer, okay, about the election. I mean, yes, the election is at the center, okay, of the move. The election is the catalyst that's going to drive the volatility. Nevertheless, in the end, almost a 50-point move expected inside of 2 days of trade is extreme. And anytime you see an expected move this high and you see the VVIX north of 110, take the expected move and double it, because that's the probability of touching. And then you come to the realization that we could legitimately see almost 100-point swing, right, inside of Tuesday and Wednesday of this week. Market still, again, doesn't matter that we're up 45 points. The volatility is not crushed out of the election trade over here. It remains, okay, and it is vicious at this point, giving us, again, almost a $50 expected move. So the decisions that you have to make, really, and just, you're going to get probably Tuesday morning. All right. Hey, listen, nobody knows anything by then. You're probably going to have plenty of time to make decisions. Okay. The one decision, though, that you have to be able to make is, are you going to be comfortable with your risk coming into this, right, in an uncontrollable environment that, hey, listen, I wear my position, okay, so that everybody can see it. I am short markets. This kind of a move doesn't necessarily help me. Nevertheless, I'm 100% comfortable with the amount of risk that I'm absorbing right now. And I look at this and I go, wow, another 50-point move can happen. I'm like, this is starting to get a little bit intense for me. But I'm still comfortable with that risk, and I'm going to hold my positions through that risk. Again, if you are a bit of a more of a market technician, that's when you got to ask yourself, bear market rally, or is it an FBI rally over here? Okay. And you look to other signals over here. The bond market doesn't necessarily know what to do. The VVIX, well, apparently it knows exactly what to do. they're still buying volatility late in today's trading session over here with just a few minutes to go to the close. Keep that in mind. Keep your helmet on. This is going to be a wild couple of days. For those of you unaware of this, we are opening up the TheoTrade chat room all Tuesday, all Wednesday. Okay, anybody and everybody can join into the TheoTrade chat room all day Tuesday, all day Wednesday. It's open house for the election. We'll be doing some trades over there. We'll be talking about intraday trades. We'll be talking about different option strategies. Join us, not to be missed over here. The one thing I can assure you, we're going to get some volatility out there come late Tuesday and most definitively on Wednesday. Thanks everybody for joining us here at TheoTrade. Have a good evening. Bye-bye.